Hello everyone, welcome back to Amuda Academy. So this is the third part of this chapter. So in this lecture, we will understand the solution for this question. So how to solve this question. In the previous video, we have understood how to show share capital in notes to accounts, how to prepare notes to accounts, and also how to prepare balance sheet and how to show share capital in balance sheet. Now, in this video, we will solve a practical problem. Right. So let us read the question first and understand it. So Mona Earth Movers Limited decided to issue 12,000 shares of rupees 100 each. How much they are issuing? How much they are issuing? They are issuing 12,000 shares at, sorry, this, yeah, at 100 each. Correct. Which means I think it is 12 lakh. Let me calculate it once. Yes, it is 12 lakh. Correct. Yeah. Next, each payable at on application we need to pay 30 rupees. Correct. On application 30, 40 on allotment, 40 on allotment, and rupees 20 on first call. Rupees 20 on first call, and remaining on the balance on second and final call. Balance on second and final call. Correct. How much the remaining balance? 30 plus 40, 70, 70 plus 20, 90. Out of 100, 90 goes, remaining 10 on second and final call. Yeah. Now, applications were received for 13,000 shares. The company issued 12,000 shares. The public applied for 13,000 shares. So received, so sorry for my handwriting. Let me rewrite it. Received 13,000 shares for 13,000 shares. Yes. Uh, Read the next line. The director decided to reject applications of 1,000. So they are rejecting 1,000 shares which came extra. Correct. And their application money being refunded in full. They are refunding it full. The allotment money was duly received on all the shares, and all sums due on calls are received. All allotment money and all sum due on calls are received, but except on 100 shares. Except on 100 shares. Record the transaction in the books of Mona Earth Movers Limited. So, what is calls in arrears? So, one point you should note it down. Here, they didn't mention it is due from the shareholders. They are not mentioning it from it is due from shareholders. They are saying all sums due on calls are received except on 100 shares. If they mention it is pending from the shareholders, we need to make calls in arrears entry also. So now, if they didn't mention, just we need to minus that. That's it. So let us do the question, and before that, we need to understand a modern rule. So, what is the modern rule? Let me explain. If asset increases, we need to debit the transaction. If asset decreases, we need to credit the transaction. Right. So, the next, if liability increases, we need to credit it. So, opposite of asset. If liability decreases, we need to debit. And if capital increases, share capital increases, we need to credit same as liability. So capital, if it decreases, obviously it is debit. So this is the basic rule you need to understand to solve this question. So right. So let us start with the journal entries. Let us start with the journal entries. So I will make the column. Okay, it should get straight. Yeah, and one more here. It's straight. No, it's not getting. So that's okay. No issues. Should get straight. Yeah. So we'll pass the journal entry. We'll pass the journal entry. So the first thing, we will receive application money. Correct. So we won't know how much we will receive. Correct. So after receiving in the bank account only, we will get to know. Correct. So first entry will be bank entry only. So after bank entry only, we'll know everything. So let us do that. First thing is bank account entry. Correct. So we are receiving application money of 30 rupees. What it's happening? Cash we are receiving. Cash we are receiving, which means our bank is going up. Bank is a asset. Correct. So if cash is increasing, that is an asset. So what we need to do, if a asset increases, we need to debit the transaction. We need to debit the transaction. So 1 second. Yeah, we need to debit the transaction. How much we have received? How much we have received? 30 rupees on 13,000 shares, because we have received 13,000 shares. So 13,000 into, so shall I write it here? 13,000 into how much we have received on application? 30 rupees. So what is the amount? 13,000 into 30 rupees. Correct. It is 3,90,000 we have received in the bank account. 3,90,000. 3.9 lakh. Right. So now on what we have received. So with along with application money. So what it will be if we receive investment from the public, we need to return them back. It is a liability, correct? So it will be on liability side to share application money. To share application money, how much we have received? We have received 3.9 lakh. Correct. So in narration, we should write being application money received. This is more than enough, right? So the next one. So we need to transfer whatever the application money we have received for shares. So we need to transfer it to share capital account. From where we need to transfer? From share application money account to share capital account. So what is share capital? Share capital is a liability. So capital, if it increases, we need to credit it. So if we transfer money from share application to share capital account, what will happen? Capital will rise, capital increases. So what we need to do? Share capital will be on credit. Correct. So what we need to write? To share capital account. Correct. To share capital account. So now, so from where we need to transfer the amount? From share application money, we have already credited it. If you want to debit it, just reverse the transaction. Not required to write to share application money. Share application money debit. How much it is? 3.9 lakh. But the thing is, here we need to transfer to share capital only what we have issued, that is 12,000 shares of rupees 30 on application. Correct. So this is the amount we can transfer on share capital account. Correct. So how much it is? 3.6 lakhs. You can calculate it once. So remaining, what will happen to remaining? So what will happen to remaining? They are saying they will return the entire money where it is 13,000 shares, 1000 shares rejected and being refunded in full. If they are refunding back, so what will happen? Our cash will decrease. Our cash will decrease. Then the bank account will decrease. So what will happen? If asset decreases, we need to credit it to bank account. Right. So how much it is? How much it is? So for 1000 shares into 30 rupees, it is 30,000. 1000 rupees into 30. Correct. So this is we are rejecting it and refunding it back 30,000 rupees. So did you understand these both entries? So why we are having a bank account first? Because we don't know how much money we are gonna receive. So after receiving only we will know. So the first entry will be bank account. Then we will transfer to share capital account. From the allotment, what will happen? We will make it due, and then we will receive, which means we will transfer the amount, whatever the amount is there pending from the shareholders, we will transfer to share capital, then we will receive. So let us understand that also. So now, so we need to make it due, which means we need to transfer it to share capital first. Correct. Because we know how much we need to receive from the shareholders. Correct. So let us see that. Now, second entry is allotment. On allotment, we have received, we need to receive 40 rupees for each application. Correct. So now how much we need to make it due? Share allotment account. Share allotment account debit. So to share capital account. Share capital account. So why share capital account is crediting? Because the money will debit. So money goes to share capital account. If capital increases, we need to credit it. So did you understand it? Yeah. So how much it is due? How much it is due? So on 12,000 shares, the due amount is 40 per share, which means 4,80,000 is the due amount. 4.8 lakh. 4.8 lakh we will transfer it to share capital account. Then we will receive from the shareholders. We will receive from the shareholders. So if it was not visible, sorry for that. Now you can see. Share allotment account debit 4,80,000 and we will transfer it to share capital account, that is 4,80,000. So did you understand? Then what will happen? We will receive to our bank account. Correct. So if we receive money from, sorry, if we receive money from shareholders to bank, what bank will happen? What will happen? Asset will increase. Asset will increase, which means bank account debit. Correct. Bank account debit. How much we will receive? 4.8 lakh we will receive. 4.8 lakh we will receive to share allotment account. Share allotment account. Correct. 4.8 lakh. Why share allotment account is credit? Because liability is increasing. Correct. So that's why we are crediting it. We need to pay it back to the shareholders. Correct. So liability is increasing. Now we'll move to calls. We'll move to calls. So on first call, we need to receive 20 rupees. So first we will make due entry. First we will make it due. So share first call account debit. Same similar entry. Share allotment is there. We need to write share first call. That's it. Change the name to share capital, where we will transfer to share capital account. Correct. How much is the due amount? How much is the due amount? The due amount is, wait, 12,000 shares. Here, I will write it here. 12,000 shares on call money. How much we need to receive? 20 rupees. So into 20. So how much it will be? 12,000 into 20. It will be 2 lakh 40,000. 2.4 lakh is pending from shareholders. Pending from shareholders. So the next entry, what will happen? We will receive to the bank account. We will receive to the bank account. But in the question, they are saying all the money received, but we are not receiving call money for 100 shares. We are not receiving call money for 100 shares. Correct. We need to minus it. If it is not receiving in bank account, so what will happen? Obviously, we need to minus it. Correct. Bank account debit. So why? Cash is coming, asset is increasing, bank will be debit. Obviously, yes. So how much we need to receive? Out of 12,000 shares, we are not receiving for 100 shares. So minus it 100 shares. So remaining how much we will receive? 11,900 shares. Correct. So for 11,900 shares, how much we need to receive? 20,000. So it is 2.38 lakh. 2 lakh 38,000. So we will credit it because liability is increasing. Share first call account. So how much? 2.38 lakh. Why we are not receiving 100 shares money? So we are minusing it, and the remaining 11,900 share money we are transfer. Right. So we have received in bank account, not transferring. We have already transferred it. Correct. Just in bank account, we are minusing it. Correct. Yeah. The next, the next last share second and final call debit to share capital account. So here we are transferring to share capital account, which means we are making it due. So how much we need to receive on final call? 10 rupees on 12,000 shares, which means 1,20,000, which means 1.2 lakh. So 1.2 lakh. So how much we will receive in the bank account, because we are not receiving for 100 shares, correct? So bank account debit. So we are receiving only for 11,900 shares into 10 rupees, which is 11,900 into 10. It is 1,19,000. 1,19,000. So to share second and final call, 1.1 lakh, sorry, 1,19,000. 1,19,000. So I think you have understood the entire problem and the solution. How to write it in the examination. So did you understand? You can note it down. Note down the question. Note down the whatever we have written in the screen, and note down the solution. Note down the solution. So that's it. That's it. So we are ending this video and we'll meet in the next video with another problem. Thank you for watching. Bye bye.